I think many people might think that the income levels for the Australian market might be challenged in the next 12 months because you've seen, share price underperformance from CBA with the Austrac issue, and you saw Telstra cut its dividends. Telstra is one of the big income stocks in Australia. It will cut its dividend by 30% next year. If you work out the impact of that, it will reduce, and this is an indication of how concentrated it is, Telstra's dividend cut will take 12 basis points off next year's ASX 200 dividend yield. So it'll reduce it by 0.12%. The reality is that's not a lot, but it does reduce it, so it is a fairly concentrated. But here's the good news. The good news is this year, already in August, just companies that reported in August, the likes of BHP and Rio and Woolworths and Wesfarmers, there were quite a few large dividend increases. And when we add up all the increases, and we get about a 30 basis point increase in dividends. Now that's before we take the Telstra's cut next year, so if we take that away, we actually still got an 18 basis point increase in income. So our outlook for income is still pretty good. We don't think there's, even if CommBank has to cut its dividend a little bit because of Austrac, we still think that the yield on the Australian market will be about the same it has been for the last few years, which is around 6%. Capital growth, that's something completely different. I'm not going to go there. I think that's in the hands of the gods, although I do think Australian markets still looks reasonable value, so I'm not too concerned about it, and it's actually underperformed other markets. So it's had some reasonable catch up in the last couple of weeks. Hopefully it can continue to do well into the end of the year. But there's always something on the horizon, so you've got to be always nervous about it. I mean, I'm probably more worried about interest rate rises than I would be about, North Korea, etc. I think if something did happen, it'd be over pretty quickly. But on the other hand, I think interest rates are going to rise fairly gently. I think, we're not going to see rapid rises in interest rates. I think there would be problems if there were, but that's the worry, is if interest rates rise too quickly. But so far, central banks have been gently, very, very gently raising interest rates or talking about expectations. My view is that here in Australia, probably won't see any interest rate cuts for 12 months. Rises, or changes rises or cuts for 12 months. I don't think we're going to get back to 7 to 8% interest rates. I think the amount of indebtedness in the Australian economy, we'd have rafts of people going bankrupt. House prices would be, fall massively. It's a disaster situation, but I don't think we're going to get there. I think what's happened is that inflation has reduced significantly, and so the amplitude of interest rate changes is going to be much, much more narrower than it has been historically, and maybe the range might be 1.5 to 3.5. There are people talking 3.5, the neutral rate I think the RBA did, but right at this point in time, I don't think we'd get past 3.5% at the top of the cycle.